The Climate Action Reserve is the most experienced and trusted offset registry to serve the carbon markets. As more organizations look to combat climate change and support environmental projects with true integrity, they turn to the reserve to foster real solutions and reductions in greenhouse gas emissions. We are excited to kick off the second series of Carbon Connection and feature external partners with insights and expertise in particular climate sectors and topics across the carbon market. I am your host, Lauren Napuk, and thank you for joining us. Hi, welcome to our next episode of Carbon Connection. Today, we are speaking with Fiona Oliver-Glasford, Chief Revenue Officer of ClearBlue Markets. At ClearBlue, Fiona advances low-carbon energy transitions and intersects with carbon markets through planning, policy, program design, market development, and much more across natural gas, green hydrogen, renewables, energy storage, and energy efficiency. Today, I'm delighted to be speaking with Fiona about the latest developments that have been underway in the voluntary market across North America, including pricing, new players, and projected growth. Fiona, thank you for joining us.
Hi, Lauren. So nice to be here with you today.
Fabulous. And now, Fiona, just to kick things off, I wanted to get your opinion on what the climate impact of a voluntary carbon market is and why is it needed to mitigate climate change?
Important question. The voluntary carbon market really facilitates the investments into lessening of carbon emissions over business as usual scenarios by creating those financial kickers into business cases through the ability to create and monetize tradable carbon credits related to carbon avoidance or carbon removal projects, such as switching from fossil fuels, preserving and enhancing ecosystems such as forests, et cetera, et cetera. It also facilitates foreign direct investment into jurisdictions and groups that may not have been able to get those funds and would not have been able to actualize lower carbon projects without those added financial signals created by carbon markets.
That's fantastic. I really appreciate that note that with the voluntary carbon market, we're able to bring in new players who might have not been able to participate. And that's really critical of the market. And what is the current state of the voluntary carbon market?
Yeah, so the voluntary carbon market really has seen a flattening over the last few months after some high profile media stories and court cases spreaded some uncertainty and risk into companies' emission reduction planning, as well as kind of a backdrop of other macroeconomic activity. ClearBlue is very optimistic, though, that the credible parties in the market that have been working to update and upgrade policies and regulations, such as the ICBCM updates, will help to kind of cut through those stories, drive increased trust, and thereby get the market picking back up to where it was pre-2023 levels. Really think that, voluntary carbon market is a relatively new market. And so with that, you do see these natural oscillations and things finding the right places, rules coming into place that need to be there, as well as weeding out unscrupulous parties. But we see that companies are confused about which offsets to buy, as well as which claims to be made, which has caused them to hold off their investments in the past few months. And we do think that ICBCM that seeks to address those issues. And of course, VCMI and SBTI as well are working to solve the claims being made.
That's helpful to know that there's all of these different standards coming about and different groups coming together to really flesh out some of these challenges that the voluntary carbon market is seeing. And since at least I've been at Climate Action Reserve, we have seen a bit of a explosion of the voluntary carbon market. But would you say that's still the case for the market?
Yeah, that it's very true. It's been an exciting time over the last few years in carbon markets. We're actually not seeing an explosion, not at least this year. ClearBlue's market analysis reporting really shows that overall global issuances of offset credits are roughly level versus 2022, and retirements are actually down versus 2022, and retirements being those credits that companies are taking and using against their carbon reduction targets. So driving this current state, is really the critiques around the carbon market, as we've already talked about, and some of the other macroeconomic conditions. But within that bigger picture globally of what's happening in the market, it's interesting that North America is actually ramping up its efforts relative to other regions, with North American projects making up the largest amount of issuances so far in 2023 at roughly 19-20% compared to 6 to 14% between 2017 and 2022. We're seeing retirements as well from North American companies consist of roughly around 13% of retirements year to date, compared to 8% in 2022 and 5 in 2021. And we have speculation that there's some drivers there. One is that it's just one of the only options that the companies have to address their carbon emissions in the very immediate term, as well some increasing awareness that's happened kind of on this side of the pond versus EU, where awareness in carbon markets has been around for a few more years. And things like the Inflation Reduction Act that's driven climate to top of mind, just like COP26 did globally for carbon markets in 2021. Maybe just to round that out, that we did actually write a report entitled Pain Relief, Shoring Up the VCM for 2023 and Beyond. We issued that earlier this year. And that really does share the perspectives that I've just outlined, as well as a thought that we're at a bit of a critical turning point in the market. We do anticipate, of course, as we've talked about already, increased rules and regulations around VCN, which are absolutely necessary, which will hopefully increase confidence and demand. And hopefully they'll supersede the risk that the markets sputter because they become actually too complex for companies to understand. And they can't understand how to standardize what constitutes a high quality offset, how to develop strategies that are seen as high quality and credible, and how to measure them. So that's really the risk sometimes of some of these additional pieces, but absolutely they're necessary. And we're very confident that we'll see the ramp up again of markets in the short and medium term.
Thank you so much, Fiona. That's really helpful to lay out and for us to understand that there are these increased rules and regulations entering the market, as you're saying, and it's for good reason to ensure that we are having the highest quality offsets out in the market that people can have confidence in buying and selling within voluntary carbon markets. And with things like issuances being up that you've mentioned in North America, are there any other areas where you're seeing growth? For example, what sectors are we seeing the largest growth in terms of transaction volumes?
Yeah. So in the voluntary markets, in general, the sectors that have the largest transaction volumes continue to be the utilities and oil and gas companies. No surprise there. The sector that we're seeing actually with a large increase, surprisingly, is the automotive sector, which is kind of interesting. In the voluntary markets, the top retirees in the first half of 2023 included Volkswagen, Shell, Diamondback, Celsia, Boeing, Ford Air, and Skoda.
Wow, that's really interesting to learn. And you mentioned the utilities and oil and gas, as well as automotive, in terms of some of these sectors that are growing in volumes. And I was wondering why these sectors in particular?
Yeah, the sectors and companies with the largest retirements tend to be, and not always, but tend to be the ones with the highest fossil fuel consumption and usage. They're definitely in the spotlight trying to make sure they do something with their emissions. The challenges from the public around carbon neutrality claims have really dampened the interest from some of the consumer goods companies that we were seeing over the last couple of years really start to engage in this marketplace. And also, there's alternatives, especially for airlines. For example, sustainable aviation fuel has become an alternative for airlines looking to place immediate funding towards research and emission reductions for their low carbon transition.
Got it. I see. That definitely makes sense. And that there will be changing sectors getting into and out of the voluntary market depending on what's happening and what policies are being put in place. That's interesting to know. And speaking about players specifically, who are the newest players entering the voluntary market?
Yeah. In light of the VCM uncertainty, a lot of companies are increasingly interested in deciding to invest in carbon removals. And those credits tend to be at a kind of a 10 times price and often have a less certain outcome. Less than 1% of tons have been delivered to date out of all those that have been invested in so far. I mean, we do expect that number to increase, of course. This means an extremely low number of actual CDR, the removal credits, have been issued for companies to use towards their emission targets. We do see that increasing, but again, in the short term, how do we get attention towards emission reductions? We need to keep many options open. We also see that there are many new rating agencies and insurance products actually stepping in to manage risk for companies as the VCM becomes more complex. Insight on these are provided in our most recent VCM supply and demand report from June for those that are interested, but interesting insurance products to mitigate the risks around non delivery and other things in the market related to offsets.
Thank you, Fiona. And one thing you touched on was prices. And I'm wondering, what do prices look like across the voluntary market currently? And what are some of the highest selling project types out there?
Mhm. Yeah. So apart from the CDR, the removal offset credits, which definitely are at the top end of prices, we've really seen an overall stagnation of prices in 2023 after highs in 2022. At ClearBlue, we do package things into several categories of offsets through our global carbon markets services. And we're seeing that the prices for category three, which are those renewable landfill and waste projects from developing countries, roughly in the range of $1 to $7 per ton. Prices for what we call category two, which tend to be household and renewable projects from least developed countries, alongside European and North American renewable projects, and industrial emission destruction being around $2 to $14. So, in that category, things such as cook stoves would fit in there, or other types of avoidance projects. And then prices for category one, which is really a nature based projects category. So the gamut of all nature based projects, RED Plus, ARR, other, and that has a much wider range and it runs roughly between $5 to $30 per ton, obviously with some outliers on the high end and a little bit lower as well. As I mentioned, in general, those carbon removal projects fetch the highest prices. And from the data we've seen from CDR.FYI, a great source for removal projects and information, we've seen that those projects are selling at an average of roughly $450 per ton of CO2e. ClearBlue does have a machine learning tool that clients can use that allows for current and forecasted pricing of specific project types, vintages, country of origin, and even associated SDGs, which can help project developers get a sense of what their credits might be worth and also supports those buying or holding offsets to value their needs and or holdings.
This is really interesting. And Fiona, I'm wondering if you mind if I ask, following on this question, why we see such a range in some of these prices, looking at even the nature-based projects going from $5 to $30 or renewable credits being $1 to $7. Are there any kind of tips for people looking at carbon credits within the voluntary market and understanding why there might be some of these price gaps?
And then, yeah, great question. I think that's where it does become important to make sure that when companies are embarking on buying offset credits, that they do understand what they're buying and get support from those in the market. But there's so many attributes related to different offset credits that you need to factor in. Where is that offset credit being created? What are the business's usual practices there because, of course, offset credits are only applicable if they create additionality on emission reduction activity. And so you look at different baselines of different countries, you look at vintage, what the age is of the offset credits. Are they from 2018 or are they from 2021, 2022? Those are going to be valued differently. So there's many different vectors to consider offset credits within. And that's the exciting part, but also can be the challenging part for companies. And so the categories provide a sense of what's in there, as well as different project types, of course, everything from deforestation to reforestation. When you look at the category one, each project can have its different value.
Absolutely. Yes. No, thank you so much for explaining that. That definitely makes things super fascinating as there are so many different project types out there. So for people looking at carbon credits and being able to understand this price differentiation because there are so many different factors and sectors at play. So that's really helpful to understand.
Right. And I think that one interesting thing just to note is that, obviously carbon offsets, the purpose is to reduce a ton of carbon emissions. But many of the offset credits do have inherent other values that show up as other SDGs that they might drive. And so every company, beauty is in the eye of the beholder in many cases. And sometimes a company will be looking for certain SDGs as well as the emission savings, and they're willing to pay more for that. So that's just yet another piece of the puzzle and how to think about carbon offsets.
Thank you so much for raising that point because I think it's a really critical one, especially looking at credits within the market. Because, like you mentioned, hitting some of these SDGs or sustainable development goals so that buyers of credits or companies looking to acquire credits can understand not only are you supporting the voluntary carbon market and your own climate strategies by acquiring offsets, but you could also be hitting markers like water quality or development of communities on the ground where some of these projects are. So that's a really critical point that you've made for sure.
Mhm. It's a really exciting part of it as well, because if a company is smart about how they're thinking about and buying and investing, they can just drive so much of their ESG agenda as well as just the environmental impacts, which of course are front and foremost.
Yes, it's so important. I definitely agree. And with the voluntary carbon market, what do you see as on the horizon and what can we expect moving forward of the carbon market?
ClearBlue sees a conservative increase in offset transactions in the short term and potentially a move from voluntary markets to more regulated markets with the advent of Corsia for the airline industry and Article 6, for example. We also believe we'll see more intermingling between compliance and voluntary markets as companies really add to the mix compliance offsets as potentially one way that they might want to meet their climate targets and mitigate their risks.
I love that you mentioned the intermingling between the compliance and voluntary markets and that we have more initiatives entering the voluntary market. So, with these things, can we expect to see continued growth in terms of market size?
Absolutely. ClearBlue really strongly believes we will see a continued growth in market size. We're still projecting the market reaches 1 billion retirements annually. So that's the demand side for carbon offsets by 2030. We do also anticipate a slight increase in market size out even to the end of 2023, although we'll think it'll take probably into 2024 to see the increases we've had anticipated for this year as the market builds back trust with the public and, of course, with the advent of additional rules and other guidelines.
That is super inspiring to hear. And I think you mentioning 1 billion retirements annually by 2030. I don't know if many people know that there are that many offsets out there to be taken advantage of and to make sure that we are really building the support of the voluntary carbon market as well as the presence of new players entering them. So that's super exciting to hear.
Yeah, and I think the Climate Action Reserve has such an important role. It's been a registry that's had a lot of integrity in the marketplace, and I think it's going to be playing a critical role moving forward in getting out projects and making sure that there's integrity in those projects and people can trust the offset credits that they're buying.
Thank you so much for that sentiment, Fiona. We really appreciate that as we have been around for the past over 20 years now, and we're
Mhm.
continuing to build out the sectors that we work in as well as the region. So we see the impact of our work, but know that we're excited to grow with it and support this global voluntary carbon market with partners like ClearBlue. So we're very, very excited.
Absolutely.
Fiona, before we close this episode today, which thank you so much for all of your insights into the voluntary carbon market, I did want to ask you for someone like a company that is entering the voluntary carbon market or thinking about entering the voluntary carbon market, what is a piece of advice that you might give this company?
Yeah, great question. And we do get companies asking us all the time that same question. How do we get started? And really, the first thing that I would always advise companies is to make sure that they have a good picture of what their emissions are and that they have a serious plan for how they're going to reduce their emissions. Because carbon markets isn't meant to be just something that you buy your way out of your emission reduction targets. It's really meant to address your residual emissions in the short term that you simply cannot reduce your current emissions to meet. And then when you feel comfortable that you do have a solid plan in place for decreasing the footprint of your business, then I would seek the guidance of an experienced advisor like a ClearBlue. There are others, of course, in the marketplace doing fantastic job. Make sure that company supports high quality offsets and has really good clarity on what that means and how they can advise you and be clear on what you'd like to see, what your risk tolerance is. And of course, as we spoke about before, the other objectives that you might want to see if you can achieve, as well as reducing your carbon emissions.
Thank you so much, Fiona. That is such a wonderful piece to leave us with. And you've really set up anybody who wants to enter the voluntary market on a great path forward. So I really appreciate your time today, as well as some members of the ClearBlue team who helped make this possible, which is Jennifer McIsaac, Anope Pandy, and Holly Nicholson. So thank you again, ClearBlue team, as well as you, Fiona, for participating in Carbon Connection.
Thank you so much, Lauren. This has been a lot of fun. I've loved chatting with you.